Dive into the world of innovation. Uncover secrets to thrive in startup investing and growth. Welcome to our in-depth guide on how to invest in startups and early-stage companies. In today's ever-evolving business landscape, startups are the lifeblood of innovation and economic growth. Every successful company you see today was once a small startup with big dreams. In this video, we will take you through the essential steps and strategies for investing in startups, whether you're an accredited investor or an everyday enthusiast looking to get involved. So without further ado, let's begin. What is a startup? Let's start by defining what a startup is. A startup is a newly established company with a compelling business idea and a goal to scale rapidly. Typically founded by a small group of passionate individuals, startups often face high initial costs and minimal revenue in their early stages. Take Airbnb, for example. It began in 2007 when its founders saw an opportunity to rent out their San Francisco home. Today, it boasts 6.6 million active listings worldwide in over 220 countries. However, it took years and significant investment for Airbnb to become profitable. How are startups funded? Now that we understand what startups are, let's delve into how they are funded. There are three primary ways to finance a startup. Bootstrapping. This involves self-financing, where the founders use their own savings to fund the business. While it offers complete ownership, it can be risky, and you may risk your savings if the business fails. Taking out a loan. Another option is to secure a loan to finance the startup. This allows you to maintain full ownership, but requires immediate repayment with interest. The loan application process can be time-consuming. Finding investors. Many startups choose to raise capital through various rounds of investor funding. Venture capital firms in particular seek high-growth startups and offer investment in exchange for a percentage of the company. Ways to invest in a startup. Now, let's explore how you can invest in startups, depending on your investor status. For accredited investors. Accredited investors are individuals who have earned over $200,000 annually, $300,000 if married, for the past 2 years, with a net worth exceeding $1 million, excluding their primary residence. If you fit this criteria, you have several options. Invest through crowdfunding platforms. Crowdfunding platforms like WeFunder, Seed Invest, Start Engine, and Republic offer diverse startup opportunities with varying investment levels. You can browse through these platforms, select the startups that align with your interests, and invest accordingly. Participate in IPOs. You can take advantage of initial public offerings, IPOs, to invest in startups as they transition to publicly traded companies. During an IPO, a company offers shares to the public on a stock exchange. While this approach may not yield the same early-stage returns as investing in the startup's infancy, it provides an opportunity for long-term growth. Accredited investors can purchase shares in IPOs, potentially capitalizing on a company's future success. Invest in a friend's startup. Investors who have connections within the startup ecosystem may discover investment opportunities among friends or acquaintances launching their own ventures. Startups often rely on support from friends and family during their early stages of funding. While this path requires careful consideration and due diligence, it can provide a unique opportunity to invest in a business while maintaining a personal connection with the founders. Become an angel investor. Accredited investors with financial means and entrepreneurial experience can explore becoming angel investors. Angel investors are high-net-worth individuals who invest their personal funds in startups. This approach allows accredited investors to take an active role in shaping the success of early-stage companies. Opportunities may arise through personal networks, introductions from other angel investors, or collaboration with incubators and organizations focused on startups. For non-accredited investors. If you don't meet the accredited investor criteria, you still have investment options. Publicly traded companies. While not the same as investing in early-stage startups, you can still participate in a company's growth by buying shares during their initial public offering, IPO. Once a startup goes public, anyone, including non-accredited investors, can purchase shares on the stock market. Startup funds. Consider investing in venture capital, VC funds, or private equity trusts that cater to a broad range of investors. These funds, managed by professional investors, pool capital from various investors to support startups and private companies. You'll benefit from diversification and the expertise of experienced fund managers. Pension funds. If you have a self-invested personal pension, SIP, explore the option of investing in private equity trusts. Some pension funds allocate a portion of their assets to early-stage startups, offering a unique opportunity to enhance your pension's growth potential. Education and networking. Enhance your knowledge about startup investing by attending seminars, webinars, or workshops. Networking events can connect you with entrepreneurs and potential co-investors, opening doors to investment opportunities. Building relationships within the startup ecosystem can provide valuable insights and access to promising ventures. What to look for in a startup investment. When considering a startup investment, it's crucial to conduct thorough due diligence to maximize your chances of success. Here are 4 key factors to look for. Industry and market. Before investing, assess the industry in which the startup operates. Is it a growing, stable, or declining industry? Consider the market dynamics and potential for growth. Look for startups that address a specific problem or niche within the industry, as these often have better chances of success. Evaluate market trends and whether the startup has a unique value proposition that can capture market share. Founder's background. The founder's background plays a pivotal role in the startup's success. Research the founder's experience and expertise in the industry. Have they worked in similar ventures before? A founder with industry knowledge is more likely to make informed decisions and navigate challenges effectively. Additionally, assess their leadership skills, vision, and commitment to the venture. A passionate and capable founder can drive the startup to success. Financial records. Scrutinize the startup's financial records and projections. Analyze the balance sheet, income statement, and cash flow statements. Look for signs of financial stability, such as steady revenue growth and responsible expense management. Pay attention to burn rate, which indicates how quickly the startup is spending its capital. A sustainable burn rate is essential for long-term viability. Be cautious of startups with excessive debt or a history of consistent losses. Reliable financial records provide insights into the startup's financial health and its ability to achieve profitability. Information gathering. Gather as much information as possible about the startup. This includes studying their business plan, market research, and competitive analysis. Engage with the startup's team and ask questions about their strategy, goals, and challenges. Seek feedback from industry experts and other investors who may have insights into the startup's potential. Explore the startup's online presence, customer reviews, and media coverage. A well-documented and transparent startup is more likely to be a sound investment. Investing in startups can be a rewarding endeavor, but it's not without risks. Whether you're an accredited investor or not, there are ways to get involved in the exciting world of startups. Remember to do your research, exercise patience, and consider diversifying your investments to mitigate risks. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching, and we wish you success in your startup investment journey.